And welcome you tune into Rush Hour with me, Ankita Saxena, and with me is Ankur Mishra. In the next half hour, we'll take you through what transpired in the market, the earnings that are still ongoing, and some news coming in on the global front as well. Ankur, so what have we got at the start of the show?
Yes, Bajaj Finance is the earning which has just been released, and it was an inline Q2 for Bajaj Finance. Profit came in at 22% higher at 4,875 crore on a consolidated basis. And net interest income also rose 2% to come in at 10,785 crore. My colleague Harsh Sehta is joining us on the phone line for the number crunching. Harsh, how does the number look to you?
Well, yes, absolutely. So when you're talking about Bajaj Finance's numbers, the net interest income has gone up by 22%. The expectation was it'll be up around 23 odd percent. So you've got maybe a couple of 100 crore in terms of a miss that's coming in there. Let's talk about impairments. Now that number remained elevated, which is the credit cost number. It went up by 7% QOQ. Again, maybe 2% to 3% higher than what most analysts had penciled in. And I'm talking about the consolidated numbers, of course. So this includes Bajaj Housing Finance. And that is also because most guidances have been given at a consolidated level. So I'm trying to kind of compare it on that in that sense. Your profitability, your PAT, has come in at 4,875 crore, which is up 22%. The expectation was that it will be around the 4,950 mark. It's come in, again, a couple of percentage points lower than what one would have anticipated. So it's a largely inline set of numbers. We'll have to, of course, wait and watch as to what the management commentary suggests about credit costs going forward, and for the full year FY26, what the guidance seems like. But we'll obviously have better visibility on how the numbers will look like going forward, but a largely inline set, at least for the moment, right at the outset from Bajaj Finance.
All right, Harsh, thank you so much for taking the time out and joining us with all the number crunching. But for now, we're joined by our guest, Gaurang Shah, Senior Vice President, Geojit Investments, who's now joining us to weigh in on the numbers. Hi, Gaurang. Thank you so much and good evening to you. Bajaj Finance has reported its Q2 numbers, a largely inline set coming in as far as ET now estimates are concerned. What has stood out for you and what is your reading of the numbers? Also, we do see some bit of a cut that's been coming in as far as the growth guidance is concerned. That has been revised to between 22 to 24% from an earlier 24 to 25 odd percent.
Well, thank you so much for having me on the show. Good evening to all of you all. A small disclosure that we have a positive coverage, and this coverage is given out by our research team. Our company Geojit or I do not have any investments in the stock that we are discussing. No financial interest, no conflict of interest, but we give recommendations to our clients on similar lines. They might hold their investment interest. So it has been an outperforming stock in the entire NBFC category, Bajaj Finance. And I think whatever numbers, marginal miss here and there, I don't think that should be a great concern. Momentum trends to continue as far as the credit growth is concerned, loan book growth is concerned because of credit demand going up. And, Bajaj Finance has been reporting decent asset quality as well. Expectation of concern in terms of third quarter, fourth quarter credit growth slowing down. I think that's something that we'll have to watch out for. And of course, India is one of the safest, sweetest spot as far as interest rate cuts are concerned. So possibly in the December policy or maybe possibly in the first 3 months of next year, we should see one more rate cut coming through from the RBI. That should augur well for the entire BFSI segment.
Right, Gaurang, as far as NI is concerned, and actually it is up 22% YOY, as Harsh was also mentioning, to 10,785 crore. But one of the concerning aspect of this earning is also gross NPA stage 3, which is at 1.24% versus 1.03%. What is your take on that?
I think it's a marginal bump up, possibly, detailed statement and from the management in terms of the asset quality should possibly guide us much better. But a marginal uptick, it's not like it's a, alarming number. A marginal uptick which should possibly be in line as we go into the third and the fourth quarter.
All right, Gaurang, thank you so much. On that note, we'll let you go. Thank you so much for joining us with the numbers for